The sharp slowdown in growth has put RBI in a very uncomfortable position. There is a growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, the CNBC-TV18 poll shows that 7 in 10 economists do not expect the lower GDP print to accelerate the rate cut cycle, and they believe the primacy of inflation is going to prevail for now. The MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy because of lingering inflation concerns and also because of the volatility in global markets, because a rate cut at this point can also accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, which will lay then the foundation for a rate cut in the next meeting. In fact, an overwhelming 90% of respondents expect to see the first rate cut from the RBI in the February meeting, and the total quantum of rate cuts is seen between 50 to 70 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards an eventual easing, the RBI instead may go for a CRR or a cash reserve ratio cut. But the respondents are pretty divided on the possibility of this happening, with only 50% seeing the chance of a 25 to 50 basis point cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast that is likely to grab all the eyeballs. 70% of our respondents are predicting that the RBI will lower its FY25 growth projection to 6.4 to 6.7%, and 20% foresee a revision all the way down to 6 to 6.3%. Now, on inflation, half the respondents expect the MPC will revise its projection for FY25 upwards to about 4.8 to 4.9%, while 40% are expecting a more modest increase. Now, apart from the policy rate decision, the RBI statement is also expected to focus on liquidity management, because systemic liquidity has been impacted because of increased forex interventions, and the government's cash balances have also been volatile. And so our respondents believe that the RBI will continue to manage liquidity through both main and fine-tuning operations. That's as far as the policy is concerned. Of course, markets also want to see what happens with RBI Governor Shaktikanta Das's tenure, which is supposed to end on the 10th of December.
CNBC-TV18's 20th India Business Leader Awards.
Hey, thank you for watching this on CNBC-TV18. Hope you liked it. For more such interesting news and updates, follow CNBC-TV18 on all the social media platforms.